Imagine waking up tomorrow with absolutely no investments, no portfolio, no retirement account, no crypto, nothing. You're starting completely from scratch with just your paycheck. What would you invest in first? Would you buy individual stocks, go all in on artificial intelligence, invest in Bitcoin, or would you keep your money in cash? After years of studying the markets and watching countless investors succeed and fail, I think my answer is surprisingly simple. If I had to start over today, I wouldn't try to get rich overnight. I'd focus on building wealth the boring way. And in this video, I'm going to show you exactly how I do it. First, I'll explain what I'd do if I lived in the United States. Then I'll cover how I'd invest if I were an international investor, because the strategy changes depending on where you live. Let's get started. Before we talk about investments, there's one thing that's more important than picking the perfect stock. It's building a system. Most people think successful investing is about finding the next Nvidia or Tesla. It's not. The people who build real wealth usually follow a simple plan consistently for years. If I were starting today, I'd focus on earning more money, spending less than I make, investing automatically every month, and never panic selling when the market falls. It sounds boring, but boring is often what makes people rich. The stock market has rewarded patient investors for generations. Trying to get rich quickly usually ends up doing the opposite. Now let's start with people living in the United States. The first thing I'd do is build an emergency fund. Before investing aggressively, I'd save enough money to cover at least 3 to 6 months of living expenses. Why? Because life happens. People lose jobs. Unexpected expenses appear. Markets crash. The last thing you want is to be forced to sell your investments during a downturn just because you need cash. An emergency fund gives you peace of mind and protects your investments. Next, if my employer offered a 401k with matching contributions, I'd contribute enough to get the full employer match. This is one of the closest things you'll ever get to free money. If your employer is willing to match your contributions, don't leave that money on the table. After that, if I qualified, I'd invest through a Roth IRA. One of the biggest advantages is that qualified withdrawals in retirement can be tax-free. When you're investing for 30 or 40 years, that tax advantage can make an enormous difference. Once those foundations were in place, I'd invest the majority of my money into low-cost index funds. Instead of trying to predict which company will become the next trillion-dollar business, I'd own thousands of companies all at once. That means companies like Apple, Microsoft, Amazon, Alphabet, Nvidia, Berkshire Hathaway, and many more. History has shown that broad index funds outperform most active investors over long periods. Instead of betting on one winner, you're investing in the growth of the entire economy. Once my core portfolio was established, I might dedicate around 10 to 20% to higher risk opportunities. That could include artificial intelligence companies, semiconductor businesses, healthcare innovation, renewable energy, or cryptocurrencies like Bitcoin and Ethereum. The important part is that these investments remain a small portion of the portfolio. If they perform well, great. If they don't, my long-term financial future isn't ruined. Finally, I'd ignore the daily news. Every year someone predicts a recession. Every year someone predicts a stock market boom. Most predictions turn out to be wrong. Instead of reacting to headlines, I'd simply continue investing every month regardless of whether markets were rising or falling. Consistency almost always beats prediction. Now let's talk about international investors. If I lived outside the United States, my approach would be slightly different, but the core principles would stay exactly the same. First, I'd still build an emergency fund. Second, I'd learn about the tax-advantaged investment accounts available in my country. Every country has different rules. Understanding these options can significantly improve long-term returns. Next, I'd invest in globally diversified index funds. Instead of concentrating all my money in companies from my home country, I'd want exposure to businesses across the United States, Europe, Japan, emerging markets, and other regions. The goal isn't predicting which country will outperform. The goal is owning a piece of the global economy. I'd also pay attention to currency risk. Exchange rates can affect returns. It's something worth understanding, but not something worth obsessing over. Over the long run, staying invested matters far more than trying to predict currencies. I'd also make sure investment costs stayed as low as possible. Small fees may not seem important today, but over decades they can cost thousands or even hundreds of thousands of dollars. Choosing low-cost investments allows more of your money to compound. Finally, I'd stay consistent. That's the real secret. Not finding the perfect stock, not timing the market, not predicting the next big trend, just investing month after month, year after year, while increasing investments as income grows. If I had to summarize my investing philosophy in one sentence, it would be this. Don't try to become rich overnight. Build a portfolio that can make you wealthy over the next 20 years. If you live in the United States, I'd take full advantage of retirement accounts and invest primarily in broad index funds. If you're an international investor, I'd use the best tax-efficient accounts available in your country and invest globally. Different countries, same philosophy. Own great businesses, invest consistently, stay patient, think long-term. That's exactly how I would invest if I were starting from scratch today. If you enjoyed this video, don't forget to like it because it really helps the channel. Subscribe for more videos on investing, personal finance, and building long-term wealth. And before you go, let me know in the comments. If you were starting from zero today, what would be the very first investment you'd make? Thanks for watching, and I'll see you in the next video.